this year have been a great opportunity to gain some knowledge, gain some expertise in some things, dive into some technologies.
We see more borrowers who are going to non-QM product just because the property prices went crazy high.
We do a lot of different non-QM. We can get creative to help get certain deals through to the finish line that might be a little bit more challenging from a conventional perspective.
With rates going down, we'll have people from the end of 22, beginning of 23, who got higher interest rates in their mortgages, come and get refinances.
Hello everyone, my name is Serena, and thank you so much for joining us on this special year-end digest. This year has been filled with challenges and opportunities in the mortgage market. On this episode, we will review the key highlights of this year and see what's coming in our future. I have prepared an exciting lineup of interviewees that we will be able to take a look inside their mind today. We have Alex Suslov with Capital Markets, we have Brennan Melody, Underwriting Team Lead, and Edward Webb, Wholesale Account Executive. I'll be speaking with them one-on-one throughout the episode. Now let's dive in. Hi, Edward.
Hi, Serena.
So I have a couple questions for you that we're gonna review as we're jumping into the new year. So our first question is going to be, how has the profile of the average borrower changed over the past year?
With the market being so vulnerable and with so many changes that were happening, there's definitely some trends and changes going on. I would see more Millennials and Gen Z borrowers coming into the market, and I believe those require more flexible approach in general. But yeah, it really depends on what the market is going to bring, we just have to adjust, all of us, basically.
I can definitely say that we see more borrowers who are going to non-QM product just because the property prices went crazy high, salaries didn't go high that much, so there's a lot of agency fallout. And remember, agency and FHA business is the vast majority of mortgages in the United States, so a lot of borrowers started shifting to non-QM programs. We saw obviously more cash outs lately, given the fact that people need more money. The rates are more favorable in the second half of the year. And also, especially in Florida, towards the end of the year, you get what? You get to pay your property taxes. So people need some money out to pay those taxes. And in many cases, when they don't have escrow accounts or things like that, they need to pull money out of the property, so with some more cash outs.
Millennial market definitely very strong right now, to my knowledge. But then on the flip side, you can see a lot of Gen X and Boomers looking to either downsize or whatever the case may be. So seeing some shifts in those older demographics to downsizing, kids are out of school, stuff like that.
How do you think our partners can better prepare for any changes that might come next year, like a change in interest rates?
The market is different. Sometimes it's slow, sometimes it's faster, and you have to catch up on things. I think this year have been a great opportunity to gain some knowledge, gain some expertise in some things, dive into some technologies, since there were a lot of them coming, and we had a lot of updates as well. Try to be more prepared, since the market can bring us some significant changes, talking about refinance boom and things like that. So hopefully we'll see more and more business, just be well prepared, I think, would be the most key to success into this market.
Yeah, this past year I've seen primarily loan officers who would only do agency loans switch to having to learn product knowledge on non-QM.
Yeah, non-QM have been one of those things, at some point with the huge demand on the market on agency loans, loan officers just didn't really need this product. And looking at the market today, again, it's all about flexibility and bringing the opportunities with the power of yes. With the things that happen here at A&D, I can definitely say that we bring more value into non-QM market. And with the changes that are happening, like economically and demographically, it's important because we do bring new solutions to this market, and we can qualify different diverse borrowers.
Can you list some of those changes that have happened over the past year that have had the biggest impact in the mortgage market?
A rate reversal when Fed Reserve started finally cutting the rate after the COVID, after the inflation that we had, when they were ramping up the rate higher and higher. Last year, we had a lot of cases when banks go down, and all those events provoked Fed pretty much to change their rate policy and start reducing the interest rate, which led to mortgage rates and other interest rates in the fixed income markets to go down.
In the last year, what have you seen as our most popular products?
Yeah, within the last year, I think a hot topic, whether you're reading the news, business media, whatever the case may be, housing affordability, I feel, is something that we're heavily focused on, and especially with different generations, different levels of wealth, different levels of assets. So FHA deals oftentimes are good to help with borrowers who might be having a hard time typically getting approved. Other options that are available in lieu of FHA might be non-QM. We do a lot of different non-QM. We can get creative to help get certain deals through to the finish line that might be a little bit more challenging from a conventional perspective, just given how high the rates are, how expensive housing is. Even if something fits a little bit outside of the guidelines, we might be able to find a way to make it work.
Do you see any new improvements in artificial intelligence in the coming years that could help our partners?
I would definitely say that our partners using it more and more, working with all the documents. It helps a lot doing the income calculation, and I'm not only talking about the bank statements, but also about full doc loans. Talking about our newly launched portal AIM, it's been great so far and been extremely popular through our partners. It's very clean and extremely user-friendly. I think another great tool is artificial intelligence in the guidelines section. We have recently launched new chatbot on our website, and you can just easily use it and find any question you need throughout the guidelines. So I think all these technologies that we are facing today and we're trying to develop and bring it to the market, they will make a huge difference in the future and will have a big impact on the market in general.
How do you think technology and AI has really improved the mortgage market?
From a underwriter's perspective, or for someone who works in the mortgage industry's perspective, it saves them time, it allows them to work through more files more effectively. But I think what's more important is the focus on the borrower, right? That means that you can get your loan from start to finish more quickly, and there's going to be less delays, right? So if we can review something, 3 times, 4 times more quickly, then you're going to find out that much sooner that, okay, I got to get an updated document, or I got to make an adjustment to my homeowner insurance policy, all that stuff. So yeah, from the user perspective, that's kind of what I think about the borrowers. You can log into an app, you can automatically import things like your pay stubs and your bank statements. There's just a lot of really interesting things that way to help speed the deals up for you. But then as an employee of a mortgage lender, right, it makes our lives easier, and we just get to analyze everything with a higher degree of confidence and spend less time clicking a bunch of buttons.
Alex, what trends do we see in the housing market for next year?
I would say, and you probably might feel that already on the sales side, with rates going down, we'll definitely have more refinances. We'll have people from the end of 22, beginning of 23, who got higher interest rates in their mortgages, come and get refinances. And the same we will have with the cash outs. I think refinances, cash out refinances are like some of the trends that will be there.
I've definitely seen interest in second liens going down a little bit, and borrowers willing to at least refinance their original rate with us a little bit more.
Yeah, that make more sense in some cases because your second lien with even that existing lien. Second liens make sense when there is a low interest rate in the first lien, and now when you have a higher interest rate, just
refinance the whole thing. Do you have any advice for our partners, or possibly any insight on what challenges our partners might face in the next year?
I think probably the biggest challenge would be always just to be prepared. And it's always difficult, to be honest. I guess it would be always the right time to start doing it yesterday, But getting prepared, know the product, gain some knowledge when you can, be prepared with all the marketing materials and campaigns. It's always very useful and come handy. But talking about challenges, I would definitely also say that competition is one of them, because the more business would happen, eventually the more competition it would bring to the table. And in order to stay competitive, you just have to be flexible and follow these rules. Just be sharp, be prepared, have everything you can, collect all the knowledge and experience. The more prepared you are, the less time you're going to spend on the way, meaning the more business you can gain during the process.
I would say with the evolving technologies in the mortgage industry, the person who are more well-versed with the technologies, who has good systems, can achieve better things. Like we have a lot of things that we provide to our brokers, and the broker portal that we have, the quick pricer on our website, all those things help brokers get new opportunities, jump on those and act quickly, close loans with A&D.
Yes, I think at A&D we are very big on, if you're a partner, we're actually partnered with you. We're giving you something while you're sending us business, we're helping you expand business as well.
Yep.
Yeah, I think, the challenges, right? I think everyone has been hoping for the rates to drop down and get into the fours, and we're going to have this awesome refinance boom, and we're selling loans left and right. And don't get me wrong, in operations too, we want that as well. We want to stay busy, we want the growth and all those things. And ultimately, that's not guaranteed. We don't know when that's going to occur. I think everyone's very hopeful for that, but I think it's important really to be prepared for when that does come. And in the meantime, things might feel a little slower for you. So use this time right now to educate yourself, right? The more educated you are on nuanced programs, whether they're Fannie Mae, Freddie Mac programs, they have these refi possible programs that will go ahead and help borrowers, lower income borrowers, take advantage of the rates once they start to drop. There's all these interesting things that you can do. Moreover, FHA streamlines, VA streamlines, and some new products that we're working on launching on the government front. And then as well, non-QM, right? Even when rates drop, it's easier to get loans that fit into the conventional bucket. Non-QM is still a great program for very many borrowers. We have multiple programs, and the more educated you are, if and when the rates do drop, it's going to allow you to connect your borrowers with programs that are right for them, and it's going to allow you to just sell so many more files, because those deals that other folks might turn away from just because they don't have the knowledge base or the experience to originate those loans. In the meantime, just keep doing what you can do and trying to help clients, right? Get them into homes, get them the cash out that they need. There's still ways to reduce people's payments, so we're here to help people, and keeping that in mind. I think that's how you set yourself up for success.
New year, new opportunity, and thank you so much for being here, Brennan.
Yeah, thank you so much. Appreciate it.
That's a wrap on our special year-end digest. Thank you so much to the experts that joined me here today to give us some insight on this year's trends and possibly what next year might hold in store for us. To our broker community, we truly appreciate your support, and we are also here to support you every step of the way. A&D Mortgage is wishing you a joyful holiday season and a prosperous new year. See you next year.